Well, the coronavirus continues to drive the markets, even as bankers and health professionals take decisive steps to stem the tide. Life is too short to worry about what the next headline could do to your life savings. Hi, my name is Eric Hagan, and I keep my thumb on the pulse of the economy and the markets so my clients can focus on the things that are actually important to them. Thank you for joining me the next few minutes on today's weekly economic video update. The stock market suffered through another volatile week as it wrestled with the health and economic fallout of the domestic spread of the coronavirus. Swift and decisive actions by the Federal Reserve and policy responses from the federal government did not keep stocks from recording losses for the week. The Dow Jones Industrials Average slumped 17.3%, while the Standard & Poor's 500 lost 14.98%. The NASDAQ Composite Index declined 12.64% for the week. The MSCI EAFE Index, which tracks developed overseas stock markets, fell 6.64%. The stock market continued its retreat amid fears of a darkening economic impact from the coronavirus pandemic, despite a Sunday night announcement by the Federal Reserve that it was cutting its benchmark interest rate by 100 points to nearly zero and taking steps to increase market liquidity. Stocks opened the week sharply lower, setting the stage for another difficult week for investors. Progress was reported on coronavirus testing capacity and on the efforts to combat the infection. At the same time, Washington, D.C. advanced legislation to provide financial assistance to unemployed workers and affected businesses. Neither did much to help investor anxieties, however. Stocks slid in the closing hours of the trading week, leaving stock indices near their lows of the week. The response of global central bankers to mitigate the economic impact of the coronavirus has been broad-ranging. In addition to its 100 basis point cut in the federal funds rate, the Federal Reserve also took actions to provide additional credit access to banks, committed to buy at least $700 billion in Treasury and mortgage bonds, and set up a new lending facility to backstop money market funds. The European Central Bank also announced an $800 billion plus bond buying program to support member economies. The Bank of England cut its benchmark lending rate to 0.1% and pledged to buy over $200 billion in government and investment-grade corporate bonds, while the Bank of Japan said that it would double its purchases of stocks and increase loans to businesses. Lastly, investors are struggling with answers to two unknowns. One, the trajectory of the coronavirus spread, and two, its economic cost. With coronavirus testing beginning to ramp up, these numbers may begin drawing a firmer picture of the growth of coronavirus infections in the U.S. Economic indicators such as jobless claims for unemployment insurance and the index of leading economic indicators may provide clues regarding the economy. Hey, this is Eric again. That's it for today. Don't forget to subscribe before you leave. To learn how I give my clients' life savings the attention it deserves, visit me online at www.erichagan.pro. If you'd like to get financially organized, go check out NoCostFinancialDashboard.com. And lastly, if you'd like to take control of your 401k at work, visit us over at 401kinvestmentpros.com. Thank you again for your time today. I'll look for you next week.